This is everything I did to make $1,495.58. We have a 75% win rate in the month of June, and we're only halfway through. There's still money to be made. But how do we do it? This is exactly how we did it. Going on the 15-minute, we were obviously bullish. We had an SMT at a 1 hour intermediate low with another 1 hour intermediate low. It's looking absolutely juicy. This LR does not matter because it swept out. Not only did we create an SMT here, but we also respected a 1 hour. It looked muy guapo, papacita, mamachita. And then we had amazing displacement off the SMT. When an SMT leads to displacement like that, that's how you know it's good, mama. That's how you know it's good. They keep coming back because they know it's good. One in the chat if you know what I'm saying, because I don't. Anyways, my draw for the day was the 4 hour intermediate high. I really wanted to see this get hit because it was part of the 15-minute market maker buy model. You might be asking, what is a market maker buy model? A market maker buy model and a market maker sell model is simply, bro, think about it as a V shape, right? If we start here, we go down, then we want to see it go back to this level, right? So this is literally what it was. This is where we were at 8:45. Keep in mind, I get to my job at 7 a.m. So at 7 a.m., I kind of look at the charts, kind of see what I think about what I want to see. I saw this market maker buy model immediately that looked just like this. Shout out to the artists out there. I'm better than you. Look at this. Anyways, continuing on, we have the market maker buy model basically, which means that these lows resting inside of fair value gaps will be protected until we take out our drawn liquidity, and then we can see reversals. Hence, why I'm saying, and then you can see reversals, right? Because those lows are not protected once the market maker buy model is complete. You know what I'm saying, challenge. So congratulations, you just learned something today. Smash like and continue. So we go into the day. It is 8:45 now because I'm an idiot and I went back in time. Let's skip through a little bit. And then we have this. Whoop, spoilers. Don't look at that because that's literally spoiling everything. Basically, we took out my main draw for the day at 9:25. I was watching the charts move as it took out my draw. I said, are you kidding me, bro? But then what do we have? We had an unfilled 5-minute, 2 unfilled 5 minutes right here. You can mark them out right here and right here. I don't want to keep it because I don't want to have too many lines. But basically, we had a lot of imbalances. Price goes to imbalances. It seeks out liquidity and seeks out imbalances. So we have this, right? Normally, we have retraces into liquidity, right? And that is balancing, right? These rectangles are considered fair value gaps in this little diagram that I'm drawing you. But what happens when we don't retrace into any gaps, right? Well, Papa goes, that's not right, right? And who's Papa? That could be Jeffrey Beppa Bean or maybe Puff Daddy. Really, there's a lot of different people it could be, but basically the market makers, right? So Puff Daddy and J.E., as you like to call them, as we like to call them, you and me. So when these imbalances aren't seeked out like they normally are, again, normally they're seeked out. So when they're not seeked out, then when we hit a key level, boy, you better betcha, boy, that it's going to seek out these imbalances, right? Oftentimes harshly, right? Oh, how do you know it's harshly? Well, let me show you this. Let me delete this stupid diagram. That probably barely helped you, but maybe it did. If it did, shout out. W's in the chat. Why don't you comment it? Why don't you make love to me? What happens? We seek liquidity. We seek the imbalances. And then we continue to dump. So I wanted to short right off here. A lot of people that don't know how to trade ICT models, or at least my model, didn't wait for the highest time frame inversion in the leg. The highest time frame inversion in the leg is a 3-minute. And that's why you can see right here, I got no entry because the 3-minute fair value gap is right here. But discretionarily taking the 1 minute, I could see. I saw it. I really liked, and this is where discretion comes in, right? Yeah, it wasn't a 3. We didn't take the high time frame inversion, right? And again, I did not take this trade, but I saw a lot of people do it, right? We have this 3-minute fair value gap that we ended up inversing. And although the 3-minute didn't close here, I love how much we rejected right here, right? Creating this high resistance high, not really high resistance, but the rejection off of this fair value gap, the fair value gap, of course, being the 1-minute fair value gap that's right here. You can see how beautiful that rejection looks into a really healthy displacing close. A 44.1-minute bearish candle blowing through the 1-minute IFEG and respecting a bearish 1 hour IFEG or 1 minute IFEG. And again, you can tell your bias by disrespecting versus respecting. Now, what is that? This is a fair value gap. If it's a bullish fair value gap, then we expect price to dip into it and then become bullish out of it, right? But what happens if we inverse it like this? Okay, well, if we inverse the fair value gap, we disrespect bullishness, then we can expect to respect bearishness, right? So price dips out right here and then creates, say, a bearish fair value gap, right? And then we respect that bearish one, right? You could say bearish is maybe like the red, and then bullish is like green, right? So we disrespect the bullish one, and then we respect the bearish one, proving that we have bearish ideas, right? So that's basically what we're having here. We get all this dump, all this displacement, and then what do? We freaking accumulate. We freaking accumulate. We freaking accumulate over and over and over, Puff Daddy. We keep doing it, Mr. Daddy, right? And that's what they like calling me. They like calling me, right? Maybe the people, per se. People like calling me daddy. It is what it is. It's more so just like a figure of speech. And then we get manipulation, right? So what did I see when I was going here? Well, if you want to know my thought process, really, I just wanted a 5-minute con. I was on my hands and knees begging for a 5-minute con, but the problem was that the 5-minute fair value gap was all the way over here. And the second problem was that we had taken out some major draws. We had already dumped over 200 points, so I wasn't sure if I was confident in shorts anymore. 212 point move down. And one of my rules is simply put that if we dump over 200 points, then really I shouldn't be taking any continuation trades, because when you dump that much, you're not going to just keep dumping forever. And eventually the strategy's not going to work. I mean, if you're overextended, I mean, if you're like this, bro, do you really want to take this trade right here? Do you really want to take this freaking wiener ass trade right here, right? Massive 200-point expansion, and then you want to take a trade right here? Well, you know, maybe not. Maybe I'm actually smarter than you think I am. But anyways, we didn't end up tapping into it. I did love how we generated LRL right here. It looked beautiful in my opinion. And then I wanted to see it tap into the 5-minute. Also on ES, we had some 5-minute gaps, etc. that I was really excited to see. And I wanted to see what would happen. We also ended up creating another 5-minute right around here-ish. And so I was ready for it. I was ready for the meat. And I said, Obbies, do it to me. And then eventually we get chop. We sweep out the LRL. But again, now I'm not seeing this as necessarily LRL, but I am seeing it as accumulation. So I was like, okay, technically we swept it, right? There was, I think, technically a 30-second inversion right here. Very healthy displacing candle. I did love that. I will actually keep this right here for the accumulation. Accumulation, manipulation, distribution. But why did I not like this? I didn't like this because at the point of this manipulation, right, we had closed through the 15-minute fair value gap. So at this point, we weren't really manipulating off of a low, although you could say this is technically a 30-minute intermediate low that we did sweep out. So it actually does make sense. And again, an intermediate low is just a higher low resting inside of a fair value gap, right? So if you're trading within a 30-minute fair value gap, then all of these lows would be 30-minute intermediate lows, et cetera, et cetera. So this 30-second was basically valid off a 30-second IFVG to the upside off the 30-minute intermediate high. I faded this trade simply because I thought we were going lower. And I was kind of right, kind of wrong about it. Why do you say that? Well, we're chopping around, and eventually we get our manipulation up. Finally, we dip into the 5-minute, and then we get some nasty inversions to the freaking sell side. So I entered off this candle closure, but technically I'll play it right here. There was a retrace. I got a really good fill because I wanted to wait a second because I was like, that feels low key, but, and then I was like, well, what if I enter off like a 1-minute gap tap right here just to get better RR? Because normally when candles have crappy closes like that, they like to kind of retrace a little bit and then give you the distribution. So I was like, yeah, maybe I'll get a couple extra points. If you don't know what I'm talking about, there was a 0.25 1-minute IFVG right here. We closed. I got a really good fill basically right here. And then I had my stops right about there. And then I wanted to target, and I had a 2.0 RR risk to reward, which actually means I had my stop loss like right here. It was right about 2 RR. Did I keep it on minis? I did. So this was my exact execution. Again, I'm charting on NQ, executing on MNQ, just so I can have better risk management. And then we get really good displacement. This IFVG sucks wiener cheeks. I know it does. But why did I still like it? The reason why I took this trade, even though the displacement wasn't good, and you all know that I be harping on displacement. I be loving displacement. That ain't no lie, Choppa. Choppa, that ain't no lie. But the reason I don't care about it is simply because everything else was perfect, right? We had a big dump. We have super high resistance high right here, meaning technically we shouldn't trade back to it according to the way I see price, at least. We should not trade back to this because it was a high that swept a high and caused massive distribution. And then we got a simple continuation. We had a very, very easy accumulation, and then we had our manipulation right here, manipulating into a high time frame fair value gap, not on NQ, but we did have it on ES. So we have manipulation right here into a 5-minute, but on ES, that was actually a 15-minute fair value gap that we ended up going into. So now we can delete these 5 minutes, and then you can kind of see what we were doing right here with this fair value gap and dipping into it, right? So we had the where was it? Where is it? Where's the tap? Oh, okay. ES didn't follow. Yeah, so basically, again, 1009, and then on ES, we have, wait, what? Okay, maybe I'm stupid. Anyways, I guess it didn't happen, but I like to trade, so fuck it. All right, and then we did really good right here. Price opened up at 10 o'clock. I saw this distribution towards my break-even point. I went break-even because of 10 o'clock, 9:59. I technically, guys, I'll be honest, I went break-even 5 seconds before 10 a.m. because I didn't know if something crazy was going to happen. Oh, wait, I remember. Scratch everything I said about ES. The reason I went break-even is because this 15-minute fair value gap opened at 10 a.m., right? 10 a.m. PO3. 10 a.m. is a very pivotal part of price action because not only is a 1-hour candle closing, but a 4-hour candle's closing, which means you are creating high time frame fair value gaps potentially at your stop loss, right? And at 10 a.m. after these high time frame candle closures happen, price likes to manipulate, bro. Price likes to manipulate. And so what happens, sure enough, we seek out that newly created imbalance. And then that is why my stop loss would have had its back blown out, but fortunately enough, I avoided it. So let me delete some of this stuff. Y'all could have taken the screenshots if you really cared. And then basically, I was like, maybe we could take continuation longs, but keep in mind, I was at my 9 to 5, so I got cock blocked by someone at work that was trying to talk to me, and I completely missed this incredible inversion, right? This inversion is really good, but I did low-key see it. I used having someone in my office as an excuse to not take the trade. The real reason why I did not like this was simply because ES was still inside of that 15-minute fair value gap, and this is still technically high resistance. Not only that, but I was really sold on shorts because of all this LRL, the 15-minute right here, and then the really good 1-hour intermediate low draw that I saw, right? So I was really convicted on shorts. So I took the best trade of the millennia. You can see it on MNQ. I entered right here. It was a beautiful trade. That's exactly where my entry was. And then, of course, we went straight to TP in 2 minutes, right? I could have gone here to this 5-minute intermediate low, right? We did trade into the 5-minute, and we had that inversion out. But then once we reswept the 4-hour intermediate high, we also created an SMT. We had amazing draws lower on NQ and ES. Seemed like a trade that was worth taking. The only thing I didn't like about this trade was how choppy we were on the day, right? So what was scary to me was more so just the fact that obviously we swept out this high resistance. We had that bullish reaction. We had that 5-minute. So we were trading to high resistance because technically the 5-minute intermediate high would be considered high resistance. You could go right here, 5-minute intermediate high, sweeping out that 4-hour intermediate high and creating the SMT. But we had generated LRL to the sell side, and we had amazing draws in the form of an edge DOL, which is the 1-hour intermediate low, and then also LRL that was slightly generated low, which isn't really generated, but more so the fact that these lows are no longer protected because we swept out a major objective, which validates this SMT. And then this displacement off this candle, I mean, it was just beautiful, and I was not fading that. So I put it right here. And then I got my 1-to-1. I got out. I could have gone here, but the reason why I didn't was simply because we had gone down 200 points, and then we went back up 220 points, and now I was trying to take a short back down to where we were. And again, the only reason I had conviction was because of all the LRL right here. I have told myself I wasn't going to be afraid of big manipulation candles. The big M and AMD I've been talking about a lot recently in my private journal and also probably on here. I don't really remember. But I saw this as big manipulation, creating an SMT. Obviously, ES still way down here, also holding that 15-minute fair value gap. We had true manipulation because we swept the 15-minute intermediate high here. And on NQ, we obviously swept out that 4-hour. So price action looked beautiful. And therefore, I took the trade. Was out of the trade within 2 minutes, and then we actually did end up being bullish, which honestly was confusing to me. I did not expect that. ES again not delivering, again generating more lows towards this 1 hour intermediate low. Now, I will say this, getting out of this replay, if we go into the day, I am very excited because we do have some targets if we want to. I mean, if we just place through this hourly and then we have some generation, I am loving these lows leading towards these gaps. So definitely looking forward to it. Although we do have a 4 hour and we're at all-time high, so I'm sure that won't happen. Obviously, that's only if it actually ends up taking place. But anyways, that was my recap for the day. That was literally everything I thought about, way more in depth, way more detailed than normal. If you liked it, suck on it. If you didn't like it, fuck on it. You know what I'm saying? And that is a wiener, hot dog wiener. I love hamburgers and hot dogs. I don't know what I'm doing. I'm trying to recover here and it isn't working. Anyways, chat, we're back to all-time highs tomorrow. I bet you throw your money in the market. Everyone's getting rich. Everybody manipulates the stock market. We go into war. It dumps down 7%. Then Trump just says, all right, I guess I'll end the war. So the stock market goes back to all-time highs and then it dies. So it really is that easy. Just think about it. Super makes a lot of sense. SpaceX is at fucking $300 a share or something, I'm sure. Of course, I bought none of it because I thought it was too simple. I've never traded IPOs, and I didn't know if it was going to dump off open, but I should have known that everyone was going to glaze Elon Musk's freaking wiener, bro, and that shit was going to be way too easy. So I'm going to go do absolutely nothing with my life, probably go to work at 5 a.m., trade market open at 9:30. Peace!